So Eric, you were saying that we're seeing more companies abandon such a focus on ESG. What did we see this week?
Yeah, so we've seen the theme last year, at least, was wind and solar companies. Their share prices fell by 50 to 75% as, again, demand crumbled once government subsidies ended. Inflationary pressure squeezed their margins. They all lost billions of dollars of money. What we're seeing this week is now on biofuels. It was very hip a couple of years ago to say, well, we'll just take all this recycled oil, convert it and whatnot. And lo and behold, what do we see? Companies taking $100 million, $200 million write-downs this morning from Orsted. And so it speaks to how this is not a sunset industry, traditional oil and gas. We will all be using oil, we will all be using natural gas for the rest of our lifetimes. And so in terms of what inning are we in, why do we remain bullish? It's because this is a sector that remains contrarian, even though it's the best
Mm-hmm.
performing sub-index in Canada by a country mile. We're more than doubling the TSX, broader TSX. We're even beating the NASDAQ year to date. And yet the amount of pessimism today, and you can measure this in a few ways, is worse than during the great financial crisis and worse during the lows of COVID. When you look at net length, so the amount of financial contracts that are people who are long oil, we are now at the lowest level in history. So that's a measurement of sentiment. So the market is ultra pessimistic, even though oil has done well and energy stocks themselves are up 20% year to date. So I still believe there is a massive opportunity in these names. I view this as a
Hmm.
decade plus investment theme. This is not a 1 year trade. And the biggest reason for
Right.
that is, at least in Canada, you can get companies with decades worth of inventory, 20, 30, 40, 50 years of stay-flat inventory. They've, over the
Mm-hmm.
past 2 years, paid down debt to reach their final debt targets. And now their model is to distribute all of the free cash flow back to shareholders. And I referenced before, there will be volatility, but I expect about an $80 average oil price in the next year and a half, upward bias after that point, once the market is able to absorb OPEC spare capacity. Well, the average company in Canada, we think, could buy back 14% of their stock a year at $80 oil or pay a 14% dividend. Our preference is buybacks. And so it's that stacking effect, the momentum of year after year after year, meaningful share
Mm-hmm.
buybacks, compressing the trading multiple and forcing an ongoing re-rating of valuations.
Right. Well, and it's interesting to me, 2020, as we said, it was such an out of consensus call to go long energy, even before that, of course. Um, and it, and then I think people recognize the incredible performance that we've seen. But now, Eric, it seems as though people are nervous about stepping into the energy sector once again, because if they had already, because of the demand situation. People are seeing and expecting a slowdown in the economy. But at the same time, what I find interesting as well, from a longer term perspective, which you're talking about a 10-year investment thesis here, which I agree with you on. It's interesting to note that so much of the growth in demand can also stem from the emerging markets. They only use, on a per capita basis, about a quarter of what the developed markets use. And presumably they want to have a better lifestyle. So that's like this underlying inherent demand for oil and the price of oil. And then also, correct me or give me the right stats here, but the majority of oil is dedicated to transportation. And I love it when I see people who are anti-oil and yet they want to go on every trip. And guess how they're getting there? I mean, they're
Exactly.
driving, they're flying, they're taking cruises. It's astonishing what they say and what they do versus their investment opportunity in the energy sector.
Yes, it is, and it's just the topic of energy ignorance. We could speak for 10 hours too. You correctly identified the biggest drivers of demand growth for oil going forward. It's really in emerging economies, the long-term slow but gradual increase in living standards, and the energy intensity that has, where the average person in certain countries is consuming 1 barrel of oil, and in Canada we consume about 23 barrels of oil in a single year. So that's the real reason. So there's too much focus on EVs and that small wedge. It's 27% of oil demand is gasoline. And we can even talk to a McKinsey survey that was done about 2 months ago that said that 47% of Americans who just bought an EV, guess what? Their next purchase is going to be an internal combustion engine. And so the false belief that we're on some rapid transition to people don't even know to what, that this is a sunset industry, that, Kamala Harris just yesterday was saying, well, the US oil field workers, we've got to transition them. We've got to get them into the new green economy. All of this nonsense that these people that are completely clueless and are talking from talking notes, that they just simply do not know what they're speaking about.